Well, good day there, ladies and gentlemen, and welcome into this week's edition of Damn That Stock Got Tore Up, featuring Irobot, the maker of the Roomba vacuum cleaner, the vacuum cleaner that vacuums my house every Monday, Wednesday, and Friday. That is what company we're talking about here today. They also make some devices that clean hard floors, tile floors, things like that, okay? This stock got tore up this past week, okay? Yesterday, it was down close to 32%, guys, yesterday, okay? And today, it went down around another 5 or 6% today. This stock has, been from $100-something not that long ago to now it's in the $50 range, okay? And this comes after basically they announced earnings that were not up to what Wall Street had expected, okay? So they reported numbers here, including a negative 41-cent impact due to U.S. tax code changes. A lot of companies have had that happen to them, basically these one-time effects of the tax code changes. But its outlook for revenue growth is slowing to a range of about 20% for 2018. That's not bad. I mean, 20% is not bad. With a forecast of annual revenue of about $1.05 billion to $1.08 billion, which appears to be the source of disappointment. In 2017, iRobot's revenue surged 34% on an annual basis to $884 million and soared 54% in the fourth quarter they just reported to $327 million. So those are very, very impressive numbers there, okay? The company did show a large increase in expenses, with the selling and marketing expenses jumping to almost $71 million in the fourth quarter, up from $48 million in the year ago quarter, okay guys? Investors were expecting marketing to increase during the fourth quarter and holiday season, but spending was higher than expected, okay? The company basically expects double-digit revenue growth in all regions as we continue to evolve and extend our proven sales and marketing initiatives in overseas markets, said Colin Angle, Chairman and Chief Executive Officer of iRobot, in a statement Wednesday. In the U.S., we expect continued strong sales following our 40% plus growth in 2017, guys. So this company has been on a tear this past year. It's just growing like insane, okay? iRobot, for those of you guys that do not know, they were the originators of the robotic vacuum cleaner. They were the first ones to really bring something to market and do it successfully, and they've had a dominant market share for a long, long time of the robotic vacuum cleaner business, okay? And that's basically the way we're going, okay? The whole, old stand-up, that you used to watch your mom vacuum the house with, and, she'd go around, that whole deal, like, that's in the past, okay? Like, we're moving on from that. In my opinion, if you go to stores, if there's anything such as like physical retail stores in 10 or 15 years, but if you go to a physical retail store and you try to look for like upright vacuums 10 to 15 years from now, like, good luck trying to find one. Like, they're going to be pretty much extinct. Everybody's kind of moving in this robotic game. I remember we jumped on board, it was probably about 4 or 5 years ago. Why? Because I owned some iRobot stock back then and I had bought in, and so I wanted to try their product. So I bought, a Roomba back then we upgraded a few years ago to a new model and whatnot. Now, iRobot does have a significant competitor now at this point. They've had a lot of competitors, okay? Samsung's come in this space. They've had Dyson come in this space. They've had a lot of competitors, but those competitors really try to, compete on the very, very high end, okay? Shark has come in now, and they're trying to compete on the very low end, okay? They're trying to compete on the very low end, and they're trying to attack there. So with a product that is considered pretty close to premium product, right? But at a much lower price. So we look here, the Shark Ion Robot 750 vacuum with Wi-Fi connectivity and voice control. They're pricing that at about $379 on their website, okay? So which means probably some retailers you can probably get it for less than $379, right? That's a major competitor. Now, iRobot does have a pretty relatively strong, I guess you could say, competitive moat for pricing, because they have products all across the board, okay? They got a $299 Roomba, and they've got it all the way up to $899, okay? So they really have their bases covered as far as pricing goes, and kind of like, some entry-level products for people that maybe aren't looking, for as many features and whatnot. And they obviously have probably the premier robotic vacuum cleaner out there, okay? There's really nothing that could touch the 980 as far as what's in the market currently, all right? So that is good for them, but at the same time, Shark is seen that as someone that could be a potential huge threat. And, I remember back when I was investing in iRobot, there was always worries about, like, this company could come in and this company come in. I remember back when I was with them, Dyson was talking a lot about getting in the robotic vacuum cleaner business. They came out with one, and from from my understanding, it is a complete flop, and I don't even know if they're still selling it. Maybe they are, but from what I heard, it was a complete flop. When they actually introduced that, I was already out of the stock at that point, but it hasn't worked out. Shark, maybe they could be a main competitor here. We're just gonna have to see. Now, something I did see concerning here, okay? So I go into Amazon.com, I type in a simple term, robot vacuum cleaner, okay? Probably a pretty common term. I mean, I imagine, if I was searching on Amazon for one of these. And what I find on Amazon is I find a massive amount of very highly rated robotic type vacuum cleaners on the lower end that honestly have really good ratings, okay? So, and I don't see any iRobots anywhere here, guys. So I type in, I see a bunch of brands that have 4.5 stars. And these brands I've never heard of in my life. I can almost guarantee you there's some Chinese knockoff type things, right? And I go down the list, there's a bunch more. I still haven't seen any iRobots. I go down further, then finally like the sharks start showing up and whatnot. I go down even more, and finally like 10, 12, 15 posts down, I start to see some iRobots there, which took forever to get there. So there's a lot of competition on the low end in the robotic vacuum game right now. And there's a few ways you could look at it, right? The first way is, it's nice that the market has finally, over the past few years, come to iRobot, okay? iRobot's been in the robotic vacuum cleaner business for a long time. It hasn't really gone mainstream until the last couple years, okay? Hasn't gone mainstream until really the past couple years. So you can look at it from a perspective of iRobot's in the perfect position. They're the premier player there. Everybody wants a robotic vacuum cleaner now. The whole stand-up things are starting to go away more and more. That's a good thing, but at the same time, you can say it's a bad thing because, these companies are getting a ton of money in, they're getting a ton of sales, and if some of these, Chinese knockoff companies use that money rather than spending it on themselves and lavish vacations and whatnot, and use that on more R&D, maybe those type of companies can build a strong brand and then actually start competing with iRobot on the higher end, okay? So that is something to worry about. All those ones that are selling those $200 ones, if they're making, let's say, $50 profit on each one, and they're funneling that money back into the business in research and development and whatnot, that could be a problem for iRobot over the long term. The question is, do the owners of those businesses, those Chinese corporations, are they going to be spending that on themselves, buying nice houses and cars and all that fun stuff? Or are they going to actually funnel that money back into the business? That's something, that remains to be seen there. Now, balance sheet wise, unbelievable balance sheet at iRobot. $128 million in cash and cash equivalents, another $37 million in short-term investments, and virtually no debt on this company. A phenomenal balance sheet. Now, if we look at the PE ratios here, so it's a 34 trailing PE, but on the forward PE basis, it's only at an 18, guys. Only at an 18 on this company. That's pretty low. That is pretty low in my opinion for a company that's expected to still grow 20+%, okay? They just grew revenues 54% in the past quarter. If they're still expected to grow around 20%, like that's a pretty low P for a company that's growing the way it is, okay? So if we look here at what analysts are expecting from this company, okay? So analysts are expecting the company to have done around $2.70 in the current year, 2018. They did $2.18 last year. And then next year in 2019, they're expecting around $3.35 of earnings. So a pretty big bump up there in earnings per share. Also current year, around 15% sales growth, revenue growth. And next year, 2019, expected around 15.5%, so another 15% plus year there. That's pretty strong growth numbers there, guys, in the EPS expected and in the revenue numbers, okay? So my view on iRobot is this is a company maybe I might be interested in getting back into. I was in it in the past. I don't know if it was 2013, 2014. Sometime back then, I was in this company, and it was a much more sleepy business back then. Let's just put it that way. The growth was much lower than what it is now. It was a much more sleepy business and whatnot. So maybe at this point in time, it's worth me taking a close look back into this one. And they still have the same things they had back then as far as the premier position in the market, which they still have, okay? They had a phenomenal balance sheet back when I was in the stock. They still have a phenomenal balance sheet. They still have Colin Engel there. The guy's been leading the company for, well over a decade now, founder of the company and whatnot. They still have a ton of patents, a ton of technology with this company. The only difference is between when I was in it and basically what's going on now is the company's just growing much bigger than it was back then. Back then it was like, 10% revenue growth, somewhere around there, 15% revenue growth. They just grew revenues 54% that last quarter. That's pretty crazy stuff there, guys. So definitely a company I'm gonna have to relook into very closely. And if the stock drops into the 40s, I would say there's probably a 99% chance I'm gonna start buying it if it drops under $50 per share, okay? Probably a 99% chance I'll start buying it, but we shall see as time moves on, and I'll keep you guys updated if I do start to buy that. Obviously, if you're in my stock market membership group, as soon as I buy a stock or sell a stock, I post that same exact day in there. So get in there if you're not already in there. There's a million different reasons why you want to be in there. Thank you for watching, guys, and have a great day.